right, welcome back. The Dividend Dudes here. We got Tom and Brian and myself, the anonymous dude behind the camera here. So we had this stock requested. Who was it that requested it again?
That was Punished Just.
Punished Just. Someday we'll get the story behind that username there. They requested we review this, and we were mentioning before we were recording here, we did briefly look at it in our recent stock pick video, but we felt like it warranted a bit more of a deep dive on why it was a no from us. Because unfortunately, at this current point, as of recording this video, we would not buy it. So what's the stock and why wouldn't we? So let's dive in. So yeah, go ahead.
I think what really came up was the fact that Punished Just asked for QRNNF, which is the New York Stock Exchange version of it. But this really is an Australian stock exchange stock, which is AZJ. So when we covered it, we were covering the New York Stock Exchange, which was an OTC pink slip stock, which was first a red flag. And then when we got into the financials of the company, it was just like a no.
Yeah, I shut it down real fast. I didn't give it justice.
But then I got to thinking, it's like, you know what? We really need to do some due diligence to go into the Australian side, see what the company is really like, get the Australian reports, and find out, is it really a bad, or do we just not like the pink slip stock?
Yeah, one of the things that, Brian and I have done this, as you know, for decades. So we see things right away that we think some of our viewers may not see. So we're hoping that by bringing these up in this video, and if anybody's watching this and they say, hey, what about this company? Put it in the comments. We'll be happy to look at it. We might not get to it right away, but we'll add it to our spreadsheet. And if you want a deeper dive, just let us know. We'll try to get in there and dive into it for you so you can hopefully learn some things along the way. So.
Yeah, and I think that's something we want to do more often, like exactly what you're saying in the future. So first, to soften the blow a little bit, I thought we could go into a few of the arguments for the stock, like some of the stuff that looked positive about it, even though there were some red flags immediately. We'll get to those here in a bit, but what were some of the stuff that was positive?
Well, first, cost of entry is low, so anybody can get into this thing. Well, the revenue's there. They're making money.
The revenue is there, that's true. So regarding stocks, this is not actually QRNNF, this is the Horizon Holding stock based out of Australia. When you look at that company, they look okay. I mean, their finances, it's a much bigger company. It's not quite a pink slip stock. It's a business that actually has established book of business. They have, a lot of their money comes from coal. It's a railway, so they do a lot of freight in and around Australia, and they have a pretty solid customer base. So as far as that's concerned, you can understand that their revenue is pretty predictable. Rail is a pretty straightforward, solid business. What are you going to do? Tear up a railroad track and give it to somebody else tomorrow? It's hard to do that.
Right. And it's a local Australian company, so it's only in Australia.
Right. So there's some positive things there. They have, like I said, a good revenue source coming from that, and they're pretty well established that way. Is that positive? Is that positive enough?
That's positive.
Is that all you got? Is it time to move on? Is it time to rage a bit, to do a bit of roasting?
Let's rage against the trains.
I don't want to
rage against the trains here. Okay, so first thing that we had pulled out here is it's an OTC stock. What are you seeing here?
I want to preface this just a little bit. I'm not against these companies that we say no to buying. What I look at is the opportunity to buy a company right now. So just because we say no and are negative today does not mean we won't be positive later. We did this with Chevron stock. We talked about Chevron not being a good buy, and guess what? COVID hit and we were buying Chevron.
Yep.
For this particular company, the nerd rage comes in a couple factors. First of all, it's an OTC stock. Friends don't let friends buy OTC stocks.
Right. There's a lot of red flags there. There's a lot of problems and risk. It's a gamble.
Go there. Let's hear why.
What
is it about OTC stocks?
You're expecting to go in at $2 a share and have it go up to $8 a share. You bought $20,000 of this thing, and now you've quintupled your money. But most of the pink slip stocks are not going to do that. They're not going to go up. It's like going to the casino and always putting your money on black in the roulette. most of the time you're going to lose. So
the reason why that happens is in the OTC pink slip market, there's a lot of pumps and dumps that happen.
Yep.
You will see stocks that go up for absolutely no reason other than a crowd on Reddit decided to, hey, let's pump this one today, and they also dump it at the same time. So that has nothing to do with the underlying business. And if you're new to investing, that's a very emotional roller coaster that we don't want people in this channel to partake in.
right.
Outside of
valid
that,
point.
they're very risky. They have in fact, sometimes with OTC stocks, they don't publish all of the financials. So if you want to know if your money, the loan that you're given, the stock that you're buying to increase, you don't always get all of that information. Like, you don't see it. Now, this one's a little bit better because they have the Australian company that can back them. But the reason why I think they did that was, one, for tax and tariff reasons, so that they can do business internationally without having to pay all the fees through their sub company.
Right.
But as far as like OTC goes, just look at the business failure rate for smaller companies. It's astronomical. Most businesses do not succeed past 5 years. So I can get into a whole separate article about OTC itself, but that's just that. But
And there's tax implications
Yeah.
to pink slips over regular stocks on the exchange.
all this, yep.
So there's that. And I had to go into the Australian website of Horizon to get the financial reports, to get all this information. So
You had to dig deeper. Is not regulated as well. Yeah, that's the other thing that we were bringing up before recording this. Okay, another thing we had mentioned was it's lost money over the last 5 quarters, and we were saying we might even need to check even further into that. But what are you seeing there? Or tell me more about that.
the nitty gritty. It is nitty gritty. So the last 5 quarters here, they were losing some money, but there's a reason for that. They're trying to push themselves away from the coal industry that they're prying on. So basically, a lot of the revenue comes from coal. The board and the investors say, hey, you need to get away from dirty energy, do this green energy initiative. So to do that, they got to make a change. So their executives came out and said, hey, we're going to pay you, and this is probably why people find it attractive. They said, we're going to pay you 70 to 100% of your net revenue. This is the biggest red flag that I would say, not buying it. If you pay 100% of your net revenue as a business, you have no money left over to grow or fix things as they become problems. We've seen this with others.
They're going to pay that as dividends?
That's what they promised. They said they were going to pay 70 to 100% of their net revenue. So we've seen this with other businesses. Zim said 30%, but what happened to that dividend and the stock price? It just went flat.
yeah, no revenue, you don't pay a dividend.
Right. And so what they're trying to do is they're trying to gain money, so that they made an acquisition, and then they also tried to get more business for mining materials so they can ship those.
Which they bought all in debt.
Which, exactly, they leveraged that. So in the CEO even came out and said, hey, because we did these things, we may not be able to pay the dividend that we promised. Now, if you're a new investor, you're not going to see that. You have to actually attend the conferences and actually read the articles and see what this guy said to cover that. All you know, if you're looking at the stock market, is, oh, look, it's a huge dividend check. But it's not reliable because, again, if you're paying 100% of your net revenue and you want to add a rail line or add something else, the only way that you can do that is through debt. And right now, the biggest red flag I got a problem with here is that their operation revenue right now can barely cover the debt.
Right.
Now
You
they've got.
you were mentioning that before we were recording this about specifically the debt concern. So I kind of interrupted you here, but I want to know specifically what's going on with the debt that you're concerned about.
Picture it like a credit card. If you have, you get the stereo today, right? You buy the thing on a credit card. It's easy to have it right now, but then you got to pay it, and then pay it again. So what they're doing is they're taking this debt and they're trying to leverage the growth of their company and the ability to pay this debt in the future with their current operation. There's no guarantee they can do that.
Right.
And the only way that they can compensate for that in the future is by reducing dividends or cutting operations. And that's a couple years out probably. And they might do it. They might pull it off. But if I'm going to invest in a company and I want to know that my money will be there, and when will it be there is more importantly, because here's the other thing is, if you buy it, how long are you going to wait for that to come to fruition, if it comes to fruition?
Right. So if you really want to buy these guys, what you really need to look for, if you're going to look for one thing, is watch the debt level. See if they're paying that down. Once they pay it down, to a level that's sustainable and the revenue can maintain it, and you're going to get a stable dividend from that, then that might be the time to buy it.
And that's what we're doing.
Solid.
That's what we're doing.
Yeah. And I know there was one other thing we wanted to dive into for this specific stock, and it was the institutional holdings versus retail holdings. Can you explain a bit why that was an argument against them?
Right. At the moment, what I found was 52% of holdings are retail holdings. The rest are institutional. So
why is that bad?
Institutional investors are like Charles Schwab, JP Morgan Chase, Berkshire Hathaway. Those are the big companies that pay analysts to look at businesses that they feel are going to grow or appreciate the capital that they give them. The fact that this one is so highly leveraged against like individual people, like I'm going to go out and buy a stock today. Oh, okay, I bought this company. That's a red flag, because some of the stocks, if you look at some of the bigger ones like ExxonMobil or BP or Chevron or Intel Intel and Microsoft, the big companies, there's a very heavy presence of those institutional investors. And in this case, that presence isn't there yet. So
if you want a great example of this, look no further than GameStop.
Yeah. They bailed ship, and then the ape crowd bought them out.
Right.
they propped the ship up for a little while longer. I think, would we buy this company in the future? Maybe. And if you're looking at that, I don't want to rag on them too terribly bad. I just want to say that there's a lot of other companies right now that you can know what their debt level is, what their income is, what product they make, how much they make from that product, and how quickly or how long it'll take them to pay back that money that you give them. With this one, there's so much risk that I would just say no, but if you're keen on it, add it to your watch list and pay attention to their debt. Like Brian says, pay attention to their debt level, pay attention to what they're doing operationally, and then buy them then. We're not saying no forever, we're just saying not right now.
Yeah, and I feel like the next question on people's minds now is, okay, so what do I do? So that's a really good point to bring up there, Tom. As far as next action, we're always looking for our ideal stocks, and we do a stock pick every month. So we're going to put the playlist up here for you to watch next, so you can pay attention to what's going on and why we're choosing or not choosing stocks each month. So check that out, and we'll see you there.